But to confirm this scenario in white, we should soon see a rapid third wave decline, potentially to 44K or lower next. What if something different might play out? And there is one pattern I want to show you that definitely could play out. It's a valid pattern. Again, the market is divorced, and it could indicate that after the next low, we might form a meaningful low and then rally. It is important to be aware of it so that we can observe it, because there is a lot of support here in this area around the 2024 lows, around 55K. It's also where the 38.2 retracement level is. That's a macro support level, and it likely will probably not be broken in the very first instance. So, and before we now take a look at the Wyckoff pattern, I can remind you that you can also follow us on X for a lot of additional updates, charts, news, also about Bitcoin, Elliott Wave updates, news, and much more. It's the More Crypto Online channel. There are many exclusive videos here, exclusive updates that are not published on YouTube, so feel free to check it out. Just make sure that you only follow the one with the golden check mark, More Crypto Online. Thanks so much. See you over there. Okay, so and this is the Wyckoff accumulation pattern I wanted to highlight. I mean, my primary scenario suggests that we still get another low. The Wyckoff accumulation pattern that we see on the chart here, on the Bitcoin chart, supports that idea. Absolutely, it confirms it. And the Elliott wave structures as well. Where they differ is in the depth of the next decline, in the strength of the next sell-off. The Elliott wave pattern that I'm showing you suggests we could enter an impulsive decline potentially to 44 and then 39K, but the area around 55K could still provide some short-term support. Whereas the Wyckoff pattern at least highlights something we should watch out for. There is a specific pattern, the Wyckoff accumulation, in which the market might just go a little bit lower, possibly the low to mid 50K area, just to then recover. And this is just something I wanted to discuss because I'm not a huge fan of one-sided analysis. So up here you see the textbook pattern, and we want to go through that briefly. Maybe some of you don't even know what Wyckoff is. I don't show it very often. Wyckoff was a trader and market journalist in the early 1900s, long before Bitcoin, of course. And he spent decades studying how the market or not the how the market moves, but how the biggest players in the market operate. And he noticed a pattern that repeats to this day. Big money doesn't buy, and you know that. Big money doesn't buy when everyone is bullish. It buys when nobody wants to look anymore, quietly, and over months, in a sideways range, so boring that many people lose interest. And Wyckoff called this phase accumulation. I mean, doesn't it feel a little bit like that? It does. It does. And it does follow a surprisingly consistent script. You have 5 phases, A through E, and you can see them up here. We'll go through them briefly and how they look like on the live chart. Now, this is the Bitcoin chart, of course. You can see this here is July. This is where we are currently right now, where my mouse is. But not wave A. I'm talking about Elliott wave here. No, phase A. Phase A ended here in March after the initial bounce. So phase A is actually where the immediate downtrend dies, right? So we had the bull market top, yeah, and then we had the initial downtrend. And look, we had the initial downtrend, which moved into the November lows. And first, we have here a short-term support, yeah, preliminary support. This is where the first bigger buyers show up. And this was here in November. Yeah, I mean, buyers show up, right? And then this after the initial decline, then we had a bounce and another dump. This was basically the panic, the phase, okay? And everybody was dumping at once. Volume exploded to the downside. And right into that panic, smart money is buying. After that, we have an automatic rally. This is AR, highlighted here on the chart. This was the initial reaction after the February lows. You might remember that the price snapped back up, and it did that because the sellers were gone. And the secondary test revisits the low. That's ST. It revisits the low, but from the higher low. Okay, you see that on the schematic here as well. So this all aligns very well with the textbook pattern. And it revisited the low, but on much lower volume, which made it form a higher low. Now we had the range, right? And support below here and resistance above. So then phase B started. And this is really, really boring. This is the boring phase. You see, this actually makes sense because we're currently spending some time in the same price region, like in February, in March, and even in April. B is also here in the textbook pattern, the boring part. It's the boring part. And you have an initial rally, a sell-off, and another rally. The sell-off here, marked with ST in phase B, is the July low, the 1st of July low. It's the boring part. It's usually the longest. Price chops sideways for months. The news is bad. Nobody wants the asset. And that's the point. While sentiment is on the floor, and it does feel like that, right? The big players are building their position piece by piece. Phase C then, this is where it gets really nasty. This might happen after the next bounce and the next sell-off then. You would see here and expect a lower low based on Wyckoff. It's the so-called spring. Price breaks below support, below the February and July lows, and it looks like the final breakdown is underway. Stop losses get wiped out in that case. The last holders capitulate, and then we get a key moment. The price reclaims the zone almost immediately on low volume, and that's the final test. The question behind it, is there any supply left down there? And if not, that was the low. And this is what I'm going to watch for. I will observe it anyway. We'll track it. If it happens, we might be seeing the actual reversal. So that means, in other words, I would prepare just for risk management reasons for the Elliott wave scenario that we're tracking. But also for risk management reasons, I would be very much aware that if we get a lower low and it's a fake out, we could enter the next rally phase. And this is then the D phase, and it would form higher lows, higher highs, okay, and a breakout through resistance. And this will happen on real volume. And what you often see then, this what looks like a 5-wave move up and another pullback before the breakout. And this pullback here is often the last opportunity for Wyckoff traders to enter the market. This is before the so-called markup phase begins, which is phase E. And this is when the range is history, the real uptrend begins. And that's the phase everybody sees on the chart afterwards, and where most people buy too late. And this has worked over hundreds of years. Not hundreds, hundreds of years. This is not about lines in the chart, guys. It's about market psychology. There is panic at the bottom, and there's greed at the top. And in between, the patience of the big money, right? So there will be an Elliott wave pattern as well that aligns with that. My view is, though, until we actually reclaim resistance or see 5-wave movements to the upside, we remain stuck in a bear market. I just want everybody to be aware of this pattern, because I do not want anybody who's watching this channel to be caught out. Because despite the overall bearish look on the chart, on the Bitcoin chart, it is important to understand that Bitcoin has reached the 200-week moving average, guys. Hold on. And the 200-week moving average is an area, the white line here, and Bitcoin's price is yellow. It is an area where historically bear market lows formed. Not always exactly there, but we are at a point where the reward to risk ratio for long-term investors is getting really interesting again. And I believe that we are probably close to the end of the bear market. Surely the market can still drop another 30%, but we already dropped 55%. And that last 30% might happen in 2 to 3 months. So it's probably just the shortest period of the bear market that's still ahead of us. So I just want everybody to be aware of that. And as we're getting closer to the potential